Exercise 12. Information regarding Central Company's individual investments in securities during its calendar year 2011, along with the December 31, 2011 fair values follows. And we're asked to identify whether each investment given above should be classified as a short-term or long-term investment. Short-term investments are current assets that meet two criteria. Number one, they're expected to be converted into cash within 1 year or the current operating cycle of the business, whichever is longer. And number two, they're readily convertible to cash or marketable. All other investments in securities are long-term. So let's look at the individual investments. Letter A, investment in Beeman Company's bonds, $434,650 cost, $472,465 fair value. Central intends to hold these bonds until they mature in 2016. These bonds are classified as a long-term investment, specifically held-to-maturity debt securities. Letter B, investment in Baybridge common stock, 29,500 shares, a $345,547 cost, and a $375,610 fair value. Central owns 32% of Baybridge's voting stock and has a significant influence over Baybridge. This is also a long-term investment, and since they do have significant influence over the investee, it's classified as an equity security. Letter C, investment in Carroll common stock, 12,000 shares, $178,207 cost, $192,107 fair value. This investment amounts to 3% of Carroll's outstanding shares, and Central's goal with this investment is to earn dividends over the next few years. This stock is also classified as a long-term investment, specifically as an available-for-sale equity security. Letter D, investment in Newtech common stock, 3,500 shares, $99,100 cost, $97,415 fair value. Central's goal with this investment is to reap an increase in fair value of the stock over the next 3 to 5 years. Newtech has 30,000 common shares outstanding. This is also classified as a long-term investment, specifically as available-for-sale equity securities. And finally, letter E, investment in Flock common stock, 16,300 shares, $108,663 cost, $115,400 fair value. This stock is marketable and is held as an investment of cash available for operations. Letter E meets our definition of a short-term investment. It's expected to be converted into cash within 1 year, and it's readily marketable. Since it's not a long-term investment, we don't need to classify it. Requirement 2. Prepare a journal entry dated December 31, 2011 to record the fair value adjustment of the long-term investments in available-for-sale securities. Central had no long-term investments prior to year 2011. So first we need to exclude the items that are not classified as available-for-sale securities. That excludes letter A, our held-to-maturity bonds, letter B, our equity investments, and letter E, our trading securities. Our two available-for-sale securities, the Carroll common stock and the Newtech common stock, have a cost of $178,207 and $99,100 respectively. Total cost $277,307. The fair value of Carroll is $192,107 and the fair value of Newtech is $97,415. Total fair value $289,522. The fair value exceeds cost by $12,215. We prepare the journal entry to debit the fair value adjustment account $12,215. The difference between the desired ending debit balance in the fair value adjustment account $12,215 and the existing balance, which had been zero, and credit the unrealized gain equity account for $12,215.